In this video, I want to follow up on the video we did last week, I guess, when I was talking about where I felt like the big opportunities were going to be coming forward, and it wasn't in the stock market. If you remember, we talked about corn, wheat, soybeans, and crude oil, and I want to just kind of run down through those markets again because they've already started to run. They've already started to break. This is showing signs of this is the bottom for these markets, and as I mentioned before, these are the ones that I would expect to start to move first towards a rally. And as we come through, I just want to show you, this is corn, and you can see it popped really hard today, started to rally back up off this big fall. If we come down here to oil, it started to rally. Now I've got the seasonals turned on here on oil, and seasonally speaking, oil generally gets a big rally this time of year. Now I know this is not a normal year, so oftentimes when it's not a normal year like what we're having, we throw this thing out. But it's crazy how that underlying fundamental information, or that the fundamentals that drive the long-term trends of the charts on normal years, is still there. I mean, you still have these fundamental driving factors that will move markets. And seasonally speaking, right now is when we generally see the bottom of the prices, and then we move into higher prices going into expiration. So are we going to see that again this year? I think we will. I think prices are down low enough in crude oil that it's time to start seeing it rally. Now we've got a big war going on again, as we mentioned before, between Russia and Saudi Arabia, and they're trying to drive each other out of business, and we're kind of sitting on the sidelines watching. President Trump said again today he's not ready quite to get involved in that. He's still kind of sitting there watching and see what those guys do. Crude oil prices are so low at this point, nobody can produce it and make any money at this price. So, take that into consideration and start looking at crude oil. In my opinion, this is a good place to start looking for long positions in crude oil. The traditional commodities in a time of panic or pandemic are generally the markets that rally. They generally go up, right? Food and traditional commodities and supplies like toilet paper. I mean, corn, a very important product to us. The soybeans, very important product to us. Wheat, very important product to us. People are going to need to eat. A lot of people are running to the stores and hoarding everything. They're taking it all off the shelves, and so there's going to be a larger demand to fill those voids or those gaps. And so that's why I'm much more interested in looking at these markets than I am traditional stocks. I mean, you can't eat IBM stock, right? You can't eat that when you're hungry. You can eat wheat, soybeans, and corn. These are important things. You need crude oil to burn to keep your home warm. So these are the more important staples, and this is why I'm more interested in looking over here. So we look at soybeans. Again, soybeans rallied today. Now, we have to take into consideration what's going on around the world in soybeans. We have South America, who raises a lot of soybeans, and they've had a bumper crop this year, and they're harvesting right now. But nonetheless, the price has dropped down, and it's now starting to rally. So we're seeing a turnaround in soybeans. So this is where I think another opportunity is for us in soybeans. Also, wheat. If we come to wheat, we're getting a big rally in wheat today. It broke today, and just like I was mentioning before, this is where I believe all the opportunities are going to be in the traditional commodities. So if we come back, let's go back to corn. Now, one thing people forget about is you don't have to day trade corn. You can just come in and pick up a position and move your stop to break even and hold on to it. It's not a giant market, so you can pick up a contract or two of corn and just kind of hang on to it overnight, depending on the size of your account. Of course, if we come in and look at the key, you need to have a minimum for a day margin, $550 in your account, but to hold it overnight, you only need to have $1,100. So most of us have an account that can easily accommodate that. So staying overnight in corn is not a problem. If we come down and look again here at crude oil is a little bit bigger market. So if we come over to the key in crude oil, you have to have $1,000 to day trade it, which is perfectly fine. But to keep it overnight, you have to have $4,000 to $5,000. Okay, so $5,000 in your account. If you want to keep it overnight, depending on what else you've got going on, $5,000 might be a little bit too much to keep it overnight. So if not, hey, nothing wrong with keeping crude oil overnight. All right. So let's look at soybeans again. We'll look at the key, and again, $825 day trade it throughout the day, and then your initial margin to keep it overnight, $1,600. Not a big deal to keep it overnight. If we come down, let's look at the last one down here, wheat, and we're just going to the key on wheat. You can see wheat, the day margin is $687. Keep it overnight is $1,300. No big deal. So you can keep that overnight. So the best idea, what I like to do is come in and look at the shorter term time frame charts, find the right signals, look at the setups, get in, move your stop to break even. If you want to do 2 or 3 contracts at a time, peel off 1 or 2 of them, during the daytime as the market pulls back. And then at nighttime, keep that last one that's going for the long-term trend, and then you only have to have 1 open overnight. So as we look for these 3 drive patterns in here, as this market moves through price and time throughout the day, there's drive 1, And then we come in here, there's drive 2, and then of course we come in with drive 3 to the top, and that's the end of the day and the market closed. That's wheat. So that's the recovery of wheat, and wheat's made a huge, beautiful recovery. We'll probably see a little bit of bouncing around in here, and then a continuation of the uptrend. I don't think that we're going to see lower prices in wheat. So day trading wheat is also perfectly acceptable. Here's a 5-minute chart on wheat. You can come in here and you can look for your trends, look for the bulls and bears crossovers. These are always great locations to get into the market and ride that up. If I come in here with my dollar calculator and look at that, that's a $350 move from just blue light to blue light. And of course that number doesn't represent commissions and fees, but that's on a 5-minute chart in wheat. And so these are some opportunities that you can find in some of these other markets, outside the traditional world of stocks. If we come down to the range bar 6, that's what we were looking at before. Let's come down here and look at the 5-minute chart on soybeans. So this is soybeans. Again, draw your trend lines, and you just draw those in there. And when you get the crossovers, these are good locations to get into the market. Trust your instruments. That's the whole thing. That's, I keep telling people, don't overtrade. Don't overtrade. The biggest problem that we have is we get jump in, jump out, jump in, jump out, jump in, jump out. Just wait for your instruments. Wait for the right signal. Wait for the right crossovers. Wait for the bulls and bears to give you the indication that it's time to get in. Put your stops in, and if it doesn't work out, jump right back out and, let the market run when you get a good signal. And as you can see, when it's this active, usually there's not much of a drawdown at all. You can just kind of basically put your orders on the blue light and let it trail up. And, hold one back. Play the game, right? As we talk about in class. Trade with maybe 3 contracts and then peel 2 off very quickly and let the third one ride. So if we come in here, crude oil, this is crude oil, and we can come in here and once again, we just do the crossovers and we look for these crossovers at the breaking points. And these are the locations in which you'd be entering these markets. So, there's one dot right there for that entry right there. That was a little tough. But you can see that these are the locations for entry on a long position. So each one of those would have been a nice buy signal. You can see every day. And, we already gave you the warning or the heads up that these would be good markets to be watching on the rebounds. And so today was a nice day to trade crude oil to the long side. Here's a range bar 12. And you can see this market kind of went crazy here. This was that nice big run that you just saw here, but it was very quick. You'd have to been right on your toes to catch that. And of course I was not watching this market. I was trading the E-mini S&P today and had a lot of fun trading the E-mini S&P, but it kind of died. Donald Trump came out and walked out on stage and started talking about the coronavirus, and I think everybody's minds went away from the computers and started watching what he was doing, and the market just went sideways for a long time there and finally had a little bit of a rebound in the afternoon session. But nonetheless, you can see in here where these areas of support and resistance ran their course during this volatile time here in crude oil. So lots of volatility gives you lots of opportunities for buying opportunities in these markets. It's the volatility that moves the markets. It's when these markets are dead, like during the Donald Trump, when he was giving his coronavirus speech, the market just went dead. Well, that's no fun to trade. So it's this volatility that moves the markets and gives us opportunities to have buy signals that kind of rip in our favor. So again, back to corn. Here's the range bar 6 on corn. Now, again, I want to emphasize, I've said a number of times, a lot of people forget about corn. Corn is a wonderful market to trade, and a lot of people forget about corn. As it comes down here and gives us these bottoming patterns in here, you can see nice little head and shoulders in here. Left shoulder, this is your neckline, your head down in here, your other neckline, and that's an indication the market's rebounding off the bottom and starting to rally once again. And of course, it's going off into the close, but you can see that this is, just the intercept orders coming in here, crossovers of the blue light. You can day trade this thing without too much trouble. We'll just watch the patterns. Here's a nice little triangle wedge formation, as you can see in here, coming off of this market. And again, you have to draw these and be careful and cautious and watch these things during the day and watch them build. But that takes a little bit of practice. So keep your practice up and watch these markets and look for these opportunities for the crossovers. Again, if we just draw a quick dollar calculator in here, we can see from the break of this neckline up to the peak there, that was about a $487 move in corn. So even just this first run to the top up here, that was a $387 move. So corn, and there's also a mini corn if you feel like that's even too big for you, you can go down to mini corn and trade mini corn. Now, when we do trade mini corn, we'll oftentimes watch the full-size corn. So we'll have 2 on charts, right? 2 on the chart. We'll watch the full-size corn. When we get the signals on the full-size corn, we place the order over on the mini corn. And you can do that. That's a nice little strategy, because oftentimes we'll see better signals on the regular size corn than we do on the mini corn. So that's a strategy. Also watch and be very careful and mindful of the stochastics indicator. When this thing's way down here in the lower region, start looking for the crossover and a break to the upside, and that's kind of the strategy, right? We're looking for markets that are in their extremes. If the stochastics is trading right through here, be careful. Trying to trade back and forth, because it's probably creating some kind of a neutral pattern. Like in this case, it's creating this little wedge formation. So when you're in this type of a situation, watch your indicators. You're probably creating a wedge or something. You'll look for a breakout of a trend line or something, which will give you a breakout of the trend line, either bullish or bearish. Now, of course, this is a wedge formation, meaning that it's a continuation pattern. So you'd look for a break higher, right? So then you get to A, B, C up, and there you go. And then you get your breakout and take your position off at that point, and then down slide the other side. So you're at an extreme up here. This would be a great place to take a short position, and then slide down until you get the exit on the other side. So this is just kind of a quick day trading little market that oftentimes goes quite well down here on the range bar 6. And so don't forget about corn. All right, guys, that's just a quick rundown of some of the other opportunities I think that are out there on the shorter term time frame and the longer term time frame, and some of these traditional commodities are the markets that are starting to bounce and rally right now.